Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So yesterday in the report Forex market we have discussed the financial component of the current situation in detail. We have taken a look at the Fed policy, what actually options they have, which ways they could choose in the developing current situation, and actually come to conclusion that whatever way Fed will choose, they hardly could avoid the massive collapse in the economy. It's massive contraction of the consumption, slowdown on the economy, significant pace, and devaluation of the United States dollar. So it might be going with a different speed, in a different way, but actually Fed has to choose between the bad and worse scenario. So if you're interested with that topic, and if you usually do not read the Forex Report, I suggest that you read it, just because it also make really important for gold market as well. But in today's gold report, we have taken a look at some indirect drivers. So yes, we know the statistics make impact on the gold. The major driving factor of the interest rates, and we have talked a lot about this. But also there are a few indirect drivers that are not making impact directly on the performance of the gold market, but could make really significant impact on the performance just because of the situation in the political life, in the social life of the different countries, and in the geopolitics, of course. And one of the major scenarios that we have discussed, and actually the factors that we discussed, is the situation with the gas supply in Europe. You probably might be a bit surprised why there's a lot of noise around this topic in mass media, and why everybody is actually excited with this. And it is really difficult to find the core and just get in-depth understanding of the situation, trying to just read the headlines and dig in this topic by yourself. And we provide you the easy calculation using just simple maths to show what the real problems stand. We're analyzing the gas supply from the United States, particularly speaking LNG supply. We're analyzing the performance of the Gazprom as a major supplier of the gas, what changes have happened there. And we're coming to the final numbers, how much Europe lost with the problems in the Freeport plant in the United States, with the contraction of the delivery and the different pipes for the Ukraine delivery system, for the different pipes such as Nord Stream, Turkish Stream, and so on. And you'll see what is going on. And actually the problem is that Europe is losing 25% of the common supply, of the annual supply. So it's really a big problem. And they have no actual reserves. They do not have the ability to fill the gas storages for a coming winter. And you understand what could happen as we are coming close to the winter. So it will be the question either to make the houses warm or to support the industry. It might be some choice. So that leads us to suggestion that it's definitely brings some volatility on the markets, brings some uncertainty, decreasing of the industry power, rising of the social unrest, and so on. And this is, understand, really big factors for the gold performance. So running out of the European debt market, running out of the stock market in Europe, makes investors think again about gold. And that might be one of the decisive component in the overall investors' mind turning in a favor of real safe haven assets later in the year, closer somewhere to mid-autumn probably, when we also come closer to the elections in the United States. So that's briefly what we have considered. If you're interested with that, you just could read. It's not really big report this time. So speaking on the technical side, here we also have a few moments that we have to discuss, because here they are tricky. Particularly speaking on the weekly chart, we have this is not the weekly, this is daily chart, but on the weekly we have bearish trend. We have potentially bearish flag pattern and bearish trend. It means that on the daily chart we have the bearish context, and as we said, in general, market has big chances to keep going lower. But suddenly, on Friday, with this performance that we have, retracement has happened, but we are mostly interested with the pattern that has been formed here. This is bullish grabber. And this grabber suggests the taking out of this top. How we should do with our bearish context on the weekly. But the tricky moment, guys, is that actually we do not have any bullish grabber. And this is a perfect example why we every time call to check the arguable patterns on the futures, on the future prices. So this is a fixed choice. This is retail broker chart who set the quotes differently. There's some changes compared to the official quotes. But if we turn to the gold futures, you will see that in fact we have absolutely different pattern. We have bearish grabber. Suggest taking out of these lows and downward continuation. So in fact, based on the future chart and weekly chart, we have perfect bearish setup for trading to the downside. This is our pattern. This is invalidation point. Everything clear. All that you should do is just take the short position, place stop above the grabber top if you would like to make a bet on this pattern, and watch what will happen. Potential collapse might be significant. Market could form here the big butterfly, for example, if we will be correct in our suggestion. For the gold market, it's normal. We actually expect some more pressure on the gold in short-term perspective. We also talked about this many times. So, and now we're coming to the second tricky moment. What we should do with the bullish setup that we discussed on Friday on intraday charts, on the 4-hour time frame chart. Take a look what we have. Our ABCD pattern is completed. We have grabber in place right at the major 30% support. This grabber theoretically suggests upward continuation, right? Performance to the OP is really great. Thrusting action, which also definitely acceleration, which also suggests that market could reach the XOP. How we could combine these two opposite scenarios? First moment that we need to take into consideration that the minimum target of the grabber is not this top and invalidation point of the daily pattern. This is these lows, just stand slightly lower. This is minimum target. It doesn't mean that market can't go to the XOP, but at this point, at this moment, situation stands so that both patterns could work. For example, if market will reach this level, minor grabber will be completed, and then bigger grabber on the daily could start to work, pushing prices lower. This is just a theoretical combination, but it is possible. So how we should do, what we could do in the current circumstances. So if you would like to go short and you think that gold will start dropping, you need at least to see the clarity with this grabber. You need to wait either moving higher and taking out of this top to complete the minor grabber, or you have to wait when the grabber will fail. For instance, since the market on Monday will drop and close below these lows, it means the grabber has failed and you have clear bearish setup, and you just need to wait for some minor pullback, use some entry technique that you prefer. Just you easily could consider taking a short position. So this is what about the bears. If you would believe that market keep going higher into the XOP and you would like to take the long position, you should act as fast as possible. So you need to, as market stands very close to the invalidation point of the bullish setup, you could take position based on this grabber and placing stop below it. Once market will start moving higher with this grabber, move stops to the break-even and just see what will happen. Because if market will keep going higher and taking out of this stop, breaking the 1860 area, it indeed could keep going to the XOP and erase the daily grabber. So that's the scenario that you could follow. Alternatively, you could ignore this grabber, do nothing, and just place and use stop buy order around 1860. in a moment of the breakout and upward acceleration, you step in the market. So this is actually two ways how you could act. For the bearish situation, a bit more difficult because they will have to watch what will happen around this top and whether the grabber will survive or not. So that's a bit more difficult in the current circumstances. But this is two scenarios, two ways how you could act, actually depending on in what direction you prefer to trade.